Monday's market closes mixed in both grain and livestock futures. Trade John Heinberg, Total Farm Marketing, joining us with analysis. John, I want to start off with corn and the wheat market, which both had an up day today. And let's talk about corn first of all. How much did we get a push from the surprising lower yield number from Pro Farmer?
We built that number in pretty much all last week as we were going through, and then getting that confirmation from their final forecast was, definitely some of the fuel in the market as we've been seeing money flow into the corn market here really since we kind of got that talk about the dryness in China that kind of turned us a little bit higher. And now we got concerns that supplies aren't going to be there, at least to what we thought they were. So that was a big push, getting that yield number. Now we'll wait for the USDA to start making its confirmation with the February report here, September report here on the 12th, and seeing what they get when they start getting their boots on the ground. But definitely it's got this market anxious here, and with the money moving in at this time frame, we had a very good close in terms of the technical picture as we got through Monday trade.
Absolutely. So, John, though, realistically, I mean, if you look at what the Pro Farmer crop tour took off for production, it would put us below a billion bushel ending stocks on corn. Is it likely USDA would even go below that level, and how long would it take them to get there?
Typically we got to understand their process. They'll get out in the fields here now, and we'll get those first measurements on the September numbers. They'll get the ear weight, ear count, and then they'll go from there. Typically it'll be a stair-step process to the downside unless there truly is something that they find that's that dramatic. So I expect it to be the trend over the next couple of months. We start seeing that yield come down. That's what the market's probably going to be looking for, is just making sure that trend gets in place off of those reports. It may take us all the way till January before we get the final yield numbers, or maybe even into the following September, because they have the ability to do that with the September report and the grain stocks numbers, make those final adjustments back to the harvest. So it's going to be a bit of a process here, but at the same time, again, right now the market's anticipating a tighter corn supply. Biggest wrinkle in the whole picture will be what happens with the demand side of the equation, competing against the South American bushels that are out there, as well as just what happens with high prices.
Yeah, absolutely. We can't get too high here. We price ourselves out of the market. What about the wheat market? Initially, it looked like it followed corn, but then it kind of took off on its own. So if we're seeing kind of a breakout of this chart pattern, how much higher do you think we can go?
Kind of looking at that wheat market, we've been putting a bit of a round bottom in. We had that disappointing week here about a week and a half ago where we just dropped for 2 days straight, but we snapped right out of that, which to me was kind of encouraging. So we're kind of finishing that bottoming action. Now today we cleared through some moving averages, which brought the short covering in, as the funds have been sitting on their largest short position since February. So they're seeing the money flow move into the grains, and that was even with the face of the dollar pushing out today to new highs. So again, I think we got a little push up to the 200-day moving average. That's another 40 cents or so up the rung of the ladder here. But again, we'll need to continue to see things be friendly overall between both the corn and the wheat market to get that kind of lift. But again, that market is so depressed in terms of that wheat market that some move higher just feels like it needs to be in place.
Yeah. Impressive, though, to see corn and wheat up when soybeans down as hard as they were. And so let's talk about the soybean market. Old crop contracts kind of imploding, and that was just because we're getting, close to option expiration?
Well, we had option expiration for September options on Friday. We saw that big push out in that market. So probably quite a few options got exercised or got assigned and things of that nature. So now we got first notice day coming up right around the corner here on the 31st. So if you're long in the September markets, you need to be out of those positions. Kind of felt like some of those longs got hung out to dry with the 70-cent drop in the soybean market on that contract. Then you throw in the weather over the weekend, some good rains, across Minnesota, Wisconsin, good solid rainfall on Monday into Iowa and moving into Illinois. Again, just kind of makes that yield that the Pro Farmer put out there is where the USDA is at 51.9, looking like it's a little bit more in reach. Obviously, keeping those supplies relatively fresh.
Yeah, but even with record supplies, it looks like any pullbacks are going to get bought here. Demand's been really strong.
Yes, the demand's still going to be the key to this whole puzzle. Even with the down day on Monday, we're still looking at a trade that was within Friday's range, consolidative overall, but obviously with the volatility, big swings. We need to watch those soybean shipments as we get into the end of the market year. They're a little disappointing on Monday, but sales on the books for the start of the new crop year are strong, and that's just going to be something that'll help this market going forward, especially if we have any hiccups whatsoever going into harvest because of weather. or anything that can shorten this crop up a little bit. But right now, at least the supplies look heavy, and that'll keep some pressure probably on the market, or at least hold it within its current ranges.
Let's move over to the cattle market, John. It looks like cattle market, both the cash and the futures have kind of rolled over here a little bit.
Well, we got August expiring this week, so now we're focusing on the October contract. Cash 142 in the south on last week, steady, maybe a little softer in some regions. That's where we're kind of focusing. It seems like the futures market wants to stay tied to that southern cash trade, so October had a little room to come down. Hung in there pretty nicely today despite the weakness in the feeder markets, and that Monday brought out, again, reflecting the corn market. But again, I keep looking at the feeder market and talking to producers. The cash side of the feeder equation is still extremely strong. Look at the index last couple of days. So even though we're getting some pullback maybe on some technical selling and some profit taking, I still think this cattle market's got some strength to the upside, as maybe we're working through this post-Labor Day demand window here to get some footing back under these markets.
Well, we had huge weekly slaughter last week. We still have these upfront supplies, maybe cows we're trying to work through, and we should be through those pretty soon, shouldn't we?
Very much so. Again, you see this, that choice select spread staying wide. You see choice carcasses staying around 260. So that tells me there's still some good beef demand out there. Yeah, we got some heavier numbers here. Cattle on feed kind of reflected that a little bit last report too. So we got to work through those numbers. But again, the bigger picture still stays supportive, given that cow slaughter, given those tight supplies going forward. Again, still like this market on any pullbacks here for a longer term view.
And the hog market has already had a pullback here, even though we've got this big discount to the index. We had a little bit of a recovery today. Do you think can we bottom here or not?
It feels like we're trying to build something, at least December, 3 days higher in a row. October is kind of really bouncing back and forth with the index. I mean, we had that drop in retail values last week that just sent that market plummeting. And we did see a pretty good recovery on Monday. At least midday trade was $7 higher on those retail carcasses. So that's something that we need to find out. Even though the cash market still seems like it's trying to find some footing, the question is, does October go meet cash, or does the cash go meet the October? Right. And that's the kind of where we are. The index is pointing that way right now. So that's still going to be the key, is if we can get retails to stabilize, cash will need to stabilize as well. So even though we've got a nice recovery here, I'm not sure if this is just a bounce. I don't think we're out of the woods yet totally, especially given the way those fundamentals are acting.
Okay, thanks so much, John Heinberg, Total Farm Marketing.